everyone! This video will be about delivery financial model of a business plan. We are business planners and we can help you to prepare your business plan or financial model in Excel. Subscribe for more videos. Please like and share to help the channel grow. If you have a business idea of starting your own business, this very simple financial model can help you to evaluate the amount of money needed to start this business. Besides, you will also be able to see the profit, payback period of your investment and profitability of your future operating activity. Of course, it will be very interesting for you to know how stable your business idea is if something happens with revenue and expenses. So now let's go through the model and I will show you what items you should pay attention to if you want to run this business. In our model, all inputs are colored in blue. Other cells are automatic. First of all, you enter the year when all your financial projections start. Then you enter the month and year when you get the first revenue. At the beginning, you need to create a credible revenue-generating algorithm and a system of different limitations which will help you to calculate the right amount of investments needed to start this business. You start with specifying the portraits of your customers. Here, you can name your types of customers. Here, you enter average check for each type of customer. And here is a place for margin on average check for each type of customer. What is important is that you can specify the range to the customer and back in kilometers. This is needed further for your limitation system, which will automatically calculate the amount of delivery cars needed for this or that amount of clients. This is the first input for limitation system. Here, you have a switch on and switch off button, so you can include and exclude the revenue and expenses from this or that type of customer from your financial business model. This instrument is very helpful during future scenario analysis when you want to see the financial efficiency of your business idea with or without this or that type of customer. Then you enter if there is any displacement for direct costs. If your direct costs are financed from revenue, you enter 0. If your direct costs come from first and you can't finance them from revenue, you place 1 here. Then you move to the next block of limitations for your financial business model. You divide 24 hours into 4 time intervals. For each time interval, you specify the maximum mileage a delivery car can make, because there can be some traffic jams in the evening and in the morning, so the delivery car won't be able to visit as many customers as you may expect. Using this limitation system, your financial model will automatically calculate the amount of delivery cars needed to cope with this or that amount of customers. The plus is that financial model calculates the amount of cars needed, not you. If you enter the amount of cars yourself, you can make a mistake entering less cars than are really needed to provide the revenue you've already specified. As a result, you will automatically calculate the amount of investment needed to buy delivery cars. That's nice! Then you have a block of inputs concerning one delivery car. Here, you enter the price you buy it. Then you enter the price you sell an old delivery car when it reaches a specific mileage on its odometer. Then you enter a mileage when your delivery car becomes old and it's time to sell it. Then you specify the insurance payment in dollars per year and transport tax payments also in dollars per year. Then you enter the fuel consumption in liters per 100 kilometers. After that, you specify the price per 1 liter of fuel in dollars. Then you set up a depreciation period for a delivery car in months. Then you go back to your limitation system. You take a typical week and distribute customers among 4 time intervals. For example, on Monday, 20% of customers will make an order in the morning, 30% during the day, 40% in the evening, and finally 10% during the night interval. The next table is a sales plan where you specify the amount of customers by type. You can enter values monthly during first 3 years of operating activity and then extrapolate the last values on the next years of operating activity. Then you specify fixed cost dynamics from the start of operating activity. Here, you name each fixed cost item. And here, you enter fixed cost numbers per month. The algorithm is similar to previous blocks of inputs. Then we move to payroll. Here, we specify the names of positions and salaries of one person on each position. Then you specify the dynamics of people on each position from the start of operating activity. Then you deal with investment plan before the start of operating activity. Green column will show you the moment when you get the first revenue. Moving to the past from the moment of revenue, you describe the investment stage. Here, you specify what item you are going to invest in, when you invest, and how much you invest. Then you describe the investment plan during the first 36 months of operating activity. Moving to the future from the moment of starting the business, you describe the investment stage. Here, you specify what item you are going to invest in, when you invest, and how much you invest. Then you move to the typical year description. Going from January to December, you specify how many Mondays, Tuesdays, and so on in each month to get a total of 365 days in a year. These will also be needed afterwards for your limitation system to calculate the right amount of delivery cars correctly. Then you move to the final block of limitation system. Here, you distribute customers inside typical week. For example, 35% of customers inside a typical week may come on Friday and only 10% of customers may come on Monday. This instrument is needed to predict peak moments like Friday evening with traffic jams. You have to calculate correctly the right amount of delivery cars needed specifically in peak moments. Then you have two simple lines: amount of delivery cars online and delivery cars bought each month depending on growing amount of customers. These lines are automatic and it's a result from your limitation system. Each time you adjust the amount of customers, these lines change automatically and affect the amount of investment you need to start this business. Then you describe delivery car service intervals and costs of each service. This table is very simple. Here, you enter the mileage on odometer and here you specify the cost of this or that service. What is valuable about this financial business model is that all delivery cars are bought and sold and bought again automatically. You just enter the amount of customers and the model calculates the amount of delivery cars needed. Excel sells old cars and buys new ones, and this cycle goes on and on. Excel automatically buys additional delivery cars when the amount of customers is growing. That's cool! Then you specify monthly payroll of one delivery car. Here you specify names of positions, salary of one person on each position, and amount of people on each position. Also, you can specify monthly fixed costs for one delivery car. Here, you type the name of fixed cost. And here, you enter a monthly value of this cost in dollars. The next block of inputs deals with taxes. You can set the tax rates and move to the cash flow statement, where you will see the results of financial modeling. Cash flow is the main statement where you see financial efficiency of your business idea. What valuable information can you get from this table? First, you can see the total revenue, direct and fixed costs, payroll, and taxes. Second, you can see your monthly profit and cumulative cash balance. Third, one of the main things you'll see from cash flow is total amount of money you need to start the business. If you see that total financing is bigger than amount of money you have, you can add loan parameters. Amount of loan, month and year you get it, loan term in months, interest rate, and grace period for interest and body payment of the loan. After cash flow statement, you can see lines with profit and profitability. Then you can set a discount rate and look at the final financial efficiency parameters of your business idea. Now you can see the graphic illustration of your business idea. Here, we see in monthly detail simple and discounted payback period, loan coverage ratio, revenue and total expenses, profit, profitability, cash balance, cumulative profit, operation profit, and loan payment. Then you have the same information done yearly. On the next Excel sheet, we have gathered yearly consolidated cash flow statement, profit loss statement, and main financial results of your business idea. Finally, we see the financial efficiency of your delivery business idea. Is this model stable? What will happen to your business if revenue decreases or expenses rise? Now it's time to apply sensitivity analysis. Further, we have several Excel sheets where we test financial efficiency. We test the influence of such parameters as revenue, fixed and direct costs, payroll, investment, interest rate, and loan amount. How does it work? For example, let's go to the revenue sensitivity test. Here, we set the pace of increasing or decreasing the revenue. Then we push Sense button and see when our financial efficiency will go negative. Now you see how stable this business model is. Now it's a great moment to rethink your business strategy in time before you start investing your money in business. Maybe it's a good time to return back to inputs and create new scenario which is more financially strong. The same story goes with all other blocks of sensitivity analysis. So this was Delivery Financial Business Model, which can help you to check quickly the vision of your future business idea. The link to download is below this video. If this video was useful to you, please like, share and subscribe. Should you choose to take action in your startup, we can help you with business planning and financial modeling. Let's test your business idea. Stay tuned and bye-bye.